Welcome to Lesson 23. Today we learn 3 languages for reading trend, frameworks built by market legends that still shape how Wall Street and global desks talk about charts. First we'll cover Dow theory, then Elliott's 5-wave structure, and finally how Wyckoff reads what large institutions are doing. Once you know these 3, a chart that looked like noise on Bitcoin, the S&P 500, or the Accou suddenly starts to make sense. Ready to dig in together? The first language is Dow theory. It was forged on Wall Street more than a century ago, and it is still one of the most trusted ways to define a trend. The core idea is simple. Look at the Bitcoin weekly chart on your screen. A trend is not chaos. It has a clear structure. The same structure shows up on the S&P 500 and the asset. 이는 업트렌드 유리드 이트 라이크디스 로 1 그러면 하이 1 그러면 로우 2 그러면 하이. Each low is higher than the last low, and each high is higher than the last high. A downtrend is the mirror image. Lows keep getting lower, and highs keep getting lower. That is what trend means. Dow theory sees every trend in 3 phases. Phase 1 is accumulation. In accumulation, pros and institutions start buying quietly. Everyday investors often miss it, so volume stays muted. Volume equals how much trading is happening, how many shares or contracts changed hands. Phase 2 is the markup or rising phase. Traders catch on, buying piles in, and price climbs fast, like a $3 coffee that suddenly feels like a $5 habit. Volume expands with the move. Phase 3 is distribution. Early money exits while late arrivals buy at expensive prices. The same pattern you see when retail piles into highs just as smart money steps aside. These 3 acts are the engine behind every trend. The second language is Elliott wave. In the 20th century, an American analyst named R.N. Elliott found repeating patterns in price charts. Look closely at the Bitcoin daily chart. 이는 에드밴스 오픈 C5 5이브 업 5이브 1 그러면 5이브 2 스몰 폴백 그러면 5이브 3 스트롱 에드밴스 그러면 5이브 4 스몰 폴백 그러면 5이브 5 파이널 푸시 then A 스위브 디클라인 A 그러면 D 스몰 바운스 그러면 C. Why 5 plus 3? Seashells, ocean waves, tree branches. Nature nests small structures inside larger ones. That is called a fractal. Elliott argued that markets follow the same natural rhythm, whether you're watching Bitcoin or the S&P 500. This 5 plus 3 pattern repeats on the weekly, daily, and hourly charts. Big waves contain smaller waves, and those contain still smaller ones. Between waves, you often see interesting mathematical ratios. The Fibonacci sequence is 1, 1, 2, 3, 5, 8, 13. Each number is the sum of the 2 before it. Ratios from that sequence, like 1.618, show up so often in nature that people call them the golden ratio. Historically, wave 3, usually the strongest, often runs about 1.618 times the size of wave 1. Think of it like a $10,000 move that stretches toward roughly $16,000 in the next impulse. A tendency, not a promise. OEV, the post correction, open renaissance about 38% to 62% of wave. On the chart, that zone is where buying demand frequently clusters. Remember, these are probabilistic patterns, not 100% insights. A surprise headline or a Fed rate decision can blow right through them. Still, on ordinary charts, these neighborhoods tend to be meaningful trading levels. That is an empirical observation. The third language is Wyckoff theory, a map of how large institutions typically behave. Wyckoff su domakedasu e repeating cycle. Institutional accumulation 그러면 마ok hopu 그러면 distribution 그러면 마ok down. You can hunt for that cycle on the Bitcoin weekly chart on screen, and the same cycle appears on the S&P 500 and Accou. During accumulation, price chops in a range, a box, and volume stays quiet. Institutions are buying patiently. When the crowd is bored or ignoring the name, that is often their opportunity. How does price leave the box? Once they have enough inventory, volume surges and price breaks out. When price moves past their average cost, their break-even, they start booking profit and prepare to distribute. Volume leads that whole story. In one line. 1. Dow theory reads trend from higher highs and higher lows, or the opposite. 2. Elliott wave sizes moves with a 5+3 structure and golden ratio tendencies. 3. Wyckoff uses volume to read institutional intent. Accumulate, then distribute. Use all three together, and a chart that looked random starts reading as a logical structure. You can also start spotting where a rational entry might sit. Warning: never forget. These theories are probabilities and tendencies only. PE are not big percentu in sozu. Fast news or policy shocks, a Fed surprise, for example, can break every pattern overnight. Next lesson, we put all three theories to work together on real charts. Disclaimer: this lesson is for education only. It is not investment advice. Every decision and all risk are yours alone.